So today I took a trade on the new 5k funded next account, and I'm basically doing a voiceover on what I was talking about during the live trade, because it took me an hour and a half more or less to find a trade, and obviously I'm not going to post an hour and a half long video, because that's basically how long it takes for you more or less to actually find a trade or to see the setup that you prefer in the market before taking a trade. So you'll basically see in the video, I basically speak about what I want to see occur or what I want to see in price action before taking either a buy or a sell. But basically, just to summarize, what I was looking for is I was looking for shorts. The reason being is because last week we got a weekly high. However, that weekly high was the daily sweeping a swing high on the far left hand side of price. So then afterwards price retraced as it normally does after sweeping liquidity. So price retraced and then it disrespected 2 4 hour bullish FEGs. So now obviously normal traders or new traders, as soon as they see bullish confluences, more likely higher time frame bullish confluences get disrespected, they're gonna be like, okay, we're obviously going from bullish to bearish, the order flow is changing. However, if you look at the higher time frame, in order for us to actually be bullish, the higher time frame could just be disrespecting bullish confluences in premium in order to respect bullish confluences in discount, because that's normally what price does. So going into the 4 hour open just before London opened, I was basically looking for reasons to sell. So I was looking for a sweep of a swing high followed by reversal signatures, or I was looking for price to trade into a high time frame bearish FEG followed by reversal signatures. So I didn't get that. Instead, price actually ended up being really bullish as soon as 4 hour opened, and the reason is because it was trading into the weekly gap, into the new week opening gap. And normally after price does that, normally price reverses after that. So the blue line that you see on screen at the moment, I basically anticipated price to basically sweep that high and then after give me reversal signatures. However, price didn't do that. It just kept on pushing bullish, like straight past that high, and then it ended up just closing the entire weekly gap, which is totally fine, because soon thereafter, it was about an hour and a half or an hour and 40 minutes, that's when I then got my reversal signatures. And I'll show you at the moment on screen right now what I was actually looking for in order to take the sell. So price immediately displaced this 5-minute bullish FEG over here so that it could trade into this 5-minute and 15-minute FEG over there. That's what I want to see. So I want to see price put in a failure swing, and then once that failure swing basically gives me an IFEG or these places below the swing that created the failure swing, that is when I will then take the trade. So this is basically when I took the trade. So as you can see, price traded into that bullish 15-minute FEG However, it put in a failure swing, right? And as you can see, that failure swing is actually a 5-minute bearish FEG. So as price traded down again, that's when I took the trade, because I anticipated that price would displace below that 15-minute bullish FEG, or in other words, I anticipated that that failure swing would displace below the swing that put in the failure swing. So basically, price put in a bullish continuation swing. However, it obviously then put in a bullish failure swing. So if you look at it from a buy side perspective, price puts in a bullish continuation swing by tapping into the 15-minute bullish FEG. However, it then puts in a bullish failure swing. But if you look at it from the sell side perspective, that bullish failure swing that price puts in is actually a bearish continuation swing. Why is it a bearish continuation swing? Because price basically taps into that 5-minute bearish FEG in order to put in that failure swing. So I basically entered because I anticipated that price would trade lower after reaching that 5-minute bearish FEG, and as you can see, price just swept. So technically I didn't wait for confirmation. As you can see, price traded up directly after that, and then I've been in drawdown for a while. So this candle right here, price randomly out of nowhere just spiked to the upside, sweeping buy side liquidity. So price stopped me out on my personal account. You'll see there where the wick is, or just above that 5-minute bearish FEG, there's a line that goes through it. So that was basically where my personal account stop loss was. But as you can see, I was still in my funded accounts trade. Literally, I was saved by less than a point. Like literally, I was saved by less than a point. I don't know how price didn't stop me out, but I was literally saved by less than a point. So I was stopped out on my personal account, but I wasn't stopped out on my funded account. You can see that price didn't quite reach my stop loss yet. As you can see, price actually wicked through my take profit level. On the left you can see the first candle that goes through the take profit level. It literally spiked through my TP level because of news, but sadly enough, both on my live account and on my funded account, it didn't take me out of the trade. Therefore I was still in the trade. So I figured it was probably going to retrace and all that, so I closed early in profit on my live account, on my personal account. And I actually really wanted to win the trade, so I was like, you know what, if I win or if I lose, I don't care if I lose, I'm just gonna hold it on my funded account and we'll see what happens. And then price retraced into that 15-minute bearish FEG about 3 times, as you can see there, and then eventually price went back down to my take profit level. So I did put an alert on that. Then as soon as price was near my TP, I immediately closed in profit just before it hit TP. You can see around about, I closed maybe like a point and a half, 2 points just before price hit take profit, and then I closed. And as you can see, as soon as take profit actually hit, price immediately just fell. It just crashed. That alone most likely would have gotten me halfway through phase one, just catching that entire move. But obviously, like, I didn't anticipate and I didn't want to catch an entire move like that. I wanted to catch a short-term win that I know I can get. I wanted to catch a short-term move that I know I can get, that I have back tested and am 90% certain that I would get majority of the times throughout that time period, from 7 a.m. to between 7 a.m. and 10 a.m. in the morning. That's the 4-hour candle that I trade into London Open. So yeah, so that's the trade for today. I'm not actually at home at the moment. I'm just going into the charts so I can make this recording an update, give an update. But I'll show the percentage gained and all of that on my funded account once I get home. So at the moment, as you can see, this is basically the account overview on how Funded Next dashboard looks after you've taken a trade. So this is how my dashboard looks at the moment. So as you can see, I am up $79 or 1.58%. So basically I need 8% for phase one, which is $400. I am currently up $79, which is 1.58%. And for phase two, you need 4% or $200. So in total, I need $5,600 in order to pass the account.